David Moore, Equity Vantage with Robert Smith of Peregrine Private Capital. And I got a little bone to pick, actually, because, we like to say in the firm, invest in what you know, right? And if you have specific knowledge of something in Wall Street, unless you're in the House or Senate, you can't use that. Ask Martha Stewart about that, right? So how we've gotten to this point is beyond me. But, with a self-directed account, obviously, hey, you're a mortgage broker, you want to make loans with your retirement account, you can do that. But in Wall Street world, you typically can't. So where I'm going with this is that through the last, let's say, well, especially since DSTs came online, you've got, the Wall Street world wants a piece of real estate, right? And typically, if you go to your financial advisor and say, hey, I want to go invest in real estate, they're going to sell you a REIT, which the REIT owns it. You don't have the benefits and burdens of owning real estate. So it's really, you've bought into something that owns the property, but you don't get all the great things that come with real estate. And so we sort of have had a situation where you've got CRE, you've got all the real estate world that's selling the stuff, but Wall Street's been sort of sitting on the sidelines. And I would say, obviously from an investor's perspective, you should invest in what you know, but I would also put out there that if you want to invest in it without dealing with it, you better be buying from somebody that knows what you're investing in. And I would sort of put out there that we're seeing some shifts in who's actually selling investments in real estate today. And I think a lot of the times we're seeing players getting involved now that have no background in CRE that are now selling people into that without really truly understanding it. Am I off base saying that?
No, you're that's laser-like focus, and you are right on. Historically, the independent broker-dealer network continues to be the exclusive distribution mechanism for DST properties. Independent broker-dealers are small broker-dealers with 50, 100, 150 reps, which tend to be quite senior in the business and have developed a specialty over time, a market niche. And due to the small size of most DST offerings, that's where there are access. The captive broker-dealer networks, the LPLs, the American Express, the Merrill Lynches have never had and probably never will have DST properties on their platforms because they're too idiosyncratic, they lack liquidity, yada, yada, yada. 2 years ago, when the DST industry hit $10 billion or close to $10 billion in transactions, that got the attention of Wall Street in terms of how do we get a piece of that action, because DSTs were not invented on Wall Street. They were invented in the West and moved east. Ergo, they introduced the Ares UpREIT. And the Ares UpREIT is a product that's available on all of the captive broker-dealer platforms, and there's absolutely nothing wrong with an UpREIT. In our 25 years in the DST industry, I think we've used it half a dozen times.
So what is an UpREIT? And there's a number associated with that UpREIT too.
721 UpREIT, meaning it's a two-step process. First, you do a 1031 exchange into an individual DST property that is owned or tied to the UpREIT, and then after 24, 36 months, whatever the interval is structured into the UpREIT, that property and your interest in it is absorbed in a 721 tax-free exchange into the UpREIT, and your fractional ownership of that DST becomes morphs into operating units of the REIT. And the justification or rationale for it historically has been liquidity, because you can create your own liquidity after that by changing the operating units into shares of the REIT and selling shares of the REIT. However, 721 UpREITs tend to be very, very real estate specific, meaning they often don't mix and match properties. It will be all apartment REITs, all industrial REITs, or it'll be industrial with a little office. There's little opportunity to diversify over property type inside of an UPREIT. So the argument that it better diversifies you than DSTs is a canard. It's not true. You can diversify actually functionally and geographically better, we think, with individual DSTs than you can with an UPREIT. But an UPREIT is a vehicle that Wall Street uses to capture real property money, because say you're talking to your LPL broker and it's doing a great job with your financial portfolio, and you happen to mention that you're about to sell an apartment building. Well, obviously they want to try to capture those assets if they can, and historically they haven't been able to because they can't sell DSTs. Well, now here they come with the UPREIT and said, wow, here's the answer to your prayers. This is the be-all and end-all, and this is the only option available to you other than self-management. So they're really not committing an error of commission. They're not telling an untruth. It's really very much an error of omission. They're not telling you all of the truth because they don't have DST properties available to them. They only tell investors part of the story. Here's a 721 UPREIT, and you should 1031 exchange into this, because this gives me, as the broker, access control over those assets. It's basically the fast lane out of real property ownership. So they're not telling a fib. They're simply not telling the whole story and giving investors the full spectrum of opportunity.
So we sort of like to say, with our retirement side of the business, like, what do you want to invest in? You can have the small menu of only the Wall Street offerings, or you could have a self-directed account that allows you to own everything on Wall Street, everything you currently own, and then everything else the law allows. Right. I would sort of and I'm a fan of 721s. I think that they've got a definite place. But if that's your only play, that's not really giving, to your point, the options that are available. So, the 721, I think, is a great end game for somebody. If you're looking at just in today's world, we're seeing lots of people. It's been decades since we've seen seller finance, right? So now all of a sudden we're seeing seller finance. If it's your end game and you want to sell and carry a contract, note, and trust deed, whatever, fine. Right. But you better understand that you're going to have tax on debt relief and depreciation recapture in your disposition, and then you're going to have normal income tax on the interest payments, long-term capital gains on the principal payments, right? So the 721, as Bob said, I like as an end game, and maybe I'm dealing with a client that, we've worked with you with somebody's terminal, and they might have 24, 36 months left. It's a great instrument for them to go exchange into this DST, get all the benefits of the exchange. That DST investment rolls into the shares of the REIT, and then when they expire, they become an angel. At that point, they can sell the shares and pay get their heirs get stepped up basis and have no tax at that point. So it's a very attractive thing there. But I think it's really important that you need to look at, once again, who you're working with in these things, brokers, and a lot of times I will deal with somebody who's been working with their financial advisor on a transaction, and he or she says, well, financial advisor says, we ought to just sell now, pay the tax, and we'll go put the money in Wall Street. I said, well, okay, that's fine, but understand you're going to lose 40% of what you just made to tax. How long is it going to take for them to make back what you just lost? Now, an option would be to go complete the exchange, cash out, refi, take that money and go do what you want to do. But I think it's really important when somebody's looking at, they're tired of the terrible T's, right? Toilets, trash, tenants, turnover, or like, our friend Spidell says, that horrible R's, rodents, relatives, and whatever, But, you start looking at what is going to give you all those benefits and burdens of owning real estate without the heartache of doing it. And that's obviously where that DST comes in spades. And I think that the issue you've got to be aware of, if somebody's just pushing very hard for you. Hey, just the 721 is a perfect thing. There's no perfect thing. So you better be looking and working through people that are going to give you the full menu of investment options and give you the ups and downs of those options, I think. I mean, that's the reality of it. And the 721 is a wonderful thing, but it's a dead end. That's why I said it's an end game. You roll into that REIT, there's no way out of that REIT short of dying that you're going to get out maintaining your equity.
Yeah, it is your end game, and that's why we've used it so infrequently, and mostly with people who are at end of life. And as you just mentioned, I think it's very, very important to understand that CRE, commercial real estate, real property, is about as different from stocks and bonds and other financial assets as you can possibly get, because of the opaque nature of real property and because of its lack of liquidity. And so to serve yourself well, you need to deal with someone who specializes in real property, as opposed to someone who is whether it's a financial advisor, a financial planner, a registered investment advisor who is dealing 95% of the time, 99% of the time with stocks, bonds, mutual funds, straight vanilla Wall Street product, and only reaches into the real estate basket on rare occasions to try to capture more assets. They know very, very little. They know about as little as you can get about real property, how real property works, the cyclical nature of different real property types. So given the specialized nature of real property and 1031 exchange, we feel that investors do themselves a real disservice by dealing with a generalist who knows a lot about Wall Street product and very little about real property, as opposed to a specialist who spends all their time, all their energy with real property assets.
Thank you. Don't go away. We're going to come back, talk about a variety of different investment vehicles that are available. So, David Moore, Equity Advantage with Robert Smith of Peregrine Private Capital. Be right back.